When you first start your crypto journey, holding may seem like the best way to make a profit. Soon enough, however, you'll come across crypto trading. While the process can be very profitable, most people jump in without sufficient knowledge and end up with losses they can't recover from. To become a successful trader, you'll first need to learn how to read cryptocurrency charts, and that is exactly what we're going to learn in this video. Hello crypto people, welcome to Crypto Mates. We create videos about price predictions, news, and technical and fundamental analysis of cryptocurrencies. So make sure to like the video and subscribe to the channel so that you never miss any important update. Today we're going to discuss about how to read candlestick charts. So without further ado, let's dive into it. Candlesticks give you an instant snapshot of whether a market's price movement was positive or negative and to what degree. The time frame represented in a candlestick can vary widely. Coinbase Pro, for instance, defaults to 6 hours, with each candle representing a 5-minute slice, but users can set it to longer or shorter. Green candles show prices going up, so the open is at the bottom of the body and the close is at the top. Red candles show prices declining, so the open is at the top of the body and the close is at the bottom. Each candle consists of the body and the wicks. The body of the candle tells you what the open and close prices were during the candle's time frame. The lines stretching from the top and bottom of the body are the wicks. These represent the highest and lowest prices the asset hit during the trading frame. What do candlesticks tell us? Candlesticks can reveal much more than just price movement over time. Experienced traders look for patterns in order to gauge market sentiment and to make predictions about where the market might be headed next. Here are some of the kinds of things they're looking for. A long wick on the bottom of a candle, for instance, might mean that traders are buying into an asset as prices fall, which may be a good indicator that the asset is on its way up. A long wick at the top of a candle, however, could suggest that traders are looking to take profits, signaling a large potential sell-off in the near future. If the body occupies almost all of the candle with very short wicks or no visible wicks on either side, that might indicate a strongly bullish sentiment on a green candle or a strongly bearish sentiment on a red candle. How to read one-candle signals. Traders operating in really short time frames sometimes focus on just one candle. Familiarizing yourself with these one-candle signals can be a helpful exercise as a beginner. In this image, you'll find 4 common one-candle signals. A long upper shadow could be an indicator of a bearish trend, meaning that investors are looking to sell and take profit. The longer the upper shadow, the stronger an indicator. A long lower shadow could be a bullish signal, indicating that investors are looking to buy, thus driving prices up. The longer the lower shadow, the more reliable the signal. A doji candle has no body because the open and close prices are the same. These can typically be interpreted to mean there is an indecision in the market and are a possible indicator for an upcoming price reversal. Umbrellas have a distinctively long bottom wick. A red umbrella is also known as a hammer. When you see a hammer, it often means that the asset is receiving some serious buy action, and the price might soon be on its way up. Green umbrellas, on the other hand, have an ominous nickname, hanging men. They're often a signal that sellers are ready to cash out, reversing the upcycle. It's important to note that one-candle signals can be an important clue, but an accurate reading of the market requires understanding the broader context, and spotting trends and patterns in candlestick charts isn't easy. If you're not sure what investment strategy is right for you, check with a professional advisor. So that's it for today, guys. Make sure to like the video and subscribe to the channel, and we'll see you in the next one.